activity should support your future plans. If you plan to expand services or add new revenue streams, your activity should allow flexibility. Otherwise, you may need to amend your license later, which involves additional cost and process. Choosing a slightly broader but relevant activity can give you room to grow. But avoid going too broad without clarity. Hello everyone, in today's world, your personal brand is no longer optional, it is your most powerful business asset. Especially in a city like Dubai, where executives, founders, and professionals are competing at a global level, visibility and positioning can direct. You are offering strategic brand transformation. Your brand should communicate authority, strategic brand transformation. Your brand should communicate authority, expertise, and results. Focus on a niche such as CEOs, founders, or industries and results. Focus on a niche such as CEOs, founders, or industry professionals. Your communication, pricing, and presentation should reflect high value. Premium clients are not looking for cheap services. They are looking for results, clarity, and long-term impact. Now let's talk about setup. You can start with a lean team and scale gradually. Key roles include content strategists, writers, video editors, and social media managers. You also need systems for content planning, approvals, and performance tracking. Having structured workflows improves efficiency and consistency. Invest in tools for scheduling, analytics, and communication. Your back-end systems are what allow you to scale without losing quality. High-end consultancies operate on premium pricing models. You can charge monthly retainers for ongoing services. Packages can include strategy, content creation, and brand management. Premium clients are willing to pay for expertise and results. You can also offer one-time consulting, workshops, and personal brand audits. As you scale, focus on increasing client lifetime value rather than just acquiring new clients. Recurring revenue ensures stability and growth. Client acquisition is critical. Your own personal brand is your biggest marketing tool. Showcase your expertise through content, case studies, and results. LinkedIn is one of the most powerful platforms for this business. Networking also plays a major role. Attend business events, connect with founders, and build relationships. Referrals and word-of-mouth marketing will drive high-quality clients. Focus on trust and credibility. Scaling this business comes with challenges. Maintaining quality while increasing clients is one of the biggest issues. You must build strong processes and hire the right team. Client expectations can be high, so communication and delivery must be consistent. Focus on systems, not just effort. Automation and delegation will help you scale efficiently. A high-end personal brand management consultancy is one of the most powerful and scalable service businesses in today's digital economy. With the right positioning, systems, and strategy, you can build a premium client base and long-term success. If you are planning to start or scale your consultancy and need professional guidance, feel free to contact us on the given details. And don't forget to like this video, subscribe to the channel, and follow us for more powerful business ideas and strategies.
Welcome to This Explainer. Today, we're diving into something that is honestly keeping a lot of CFOs up at night. We're unpacking the rapidly diverging e-invoicing mandates of Saudi Arabia and the United Arab Emirates. Look, if you operate in the GCC, you already know there's a massive shift happening right now toward mandatory digital reporting. But the way these two jurisdictions are handling it, well, it could mean serious disruption for your financial systems if you aren't prepared. So what exactly happens when two economic giants decide to tackle the exact same problem, but choose completely different tech to do it? Both nations want to close the tax gap, they want real-time visibility into transactions, and they want to modernize their digital economies. But instead of rolling out a unified GCC standard, KSA and the UAE are taking drastically different technological paths. If you're a CFO, an IT director, or a tax pro managing cross-border operations, listen up, because you absolutely cannot just build one system and expect it to work in both markets. Let's kick things off with Section 1, Gatekeeper versus Observer Models. This is where we break down how Saudi Arabia's ZATCA and the UAE's FTA differ at a fundamental level. All right, so the UAE has adopted this really fascinating observer model. They're rolling out a decentralized that's heavily modified with their own custom ZATCA extensions. The UAE, they're using the PEPL Pint AE profile. So you can't just export some generic XML file from your ERP and call it a day. A generic UBL 2.1 XML will outright fail in both systems if you don't have those highly specialized country-specific configurations set up. The underlying architecture, the standards, the authentication methods, they are essentially speaking completely different languages.
So, the really crucial point to understand here is Saudi Arabia's incredibly strict security requirements. Every single invoice processed through Fatura has to carry an ECDSA cryptographic stamp. Basically, it's a tamper-proof digital signature that proves Zatka actually cleared it. On top of that, they require very specific TLV and base64 encoded QR codes. The UAE's PEPL model, it doesn't require any of this. Why? Because the trust is already established at the network level through your accredited service provider. Moving right along to Section 2, the cross-border collision. Let's see what happens when Fatura meets PEPL.
I really want to emphasize this reality. Compliance with WO. And here's the catch. If you are in Phase 1, the deadline to officially appoint your accredited service provider is actually July 2026. Building direct API integrations takes months, and even getting ASP connectors mapped out takes a lot of time. So the time to start evaluating your ASP and testing your system is, right now.
And if you're wondering why there's such urgency, just look at this number, 50,000 Saudi riyals. While the exact UAE penalties aren't fully finalized just yet, Saudi Arabia is already out there actively issuing cascading fines up to 50,000 riyals for Fatura integration failures and non-compliant formats. And remember, a failed clearance isn't just a slap on the wrist penalty. The financial exposure here is very real, and the UAE's eventual penalty framework is widely expected to mirror their existing very strict VAT penalties.
Okay, so here is your highly practical, step-by-step ERP integration checklist to actually achieve this dual compliance.